The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, on a day that's a little bit country and a little bit rock and roll. Of course, we were down to 2034 on the S&P cash, printing off 2056 at the moment. A market that just doesn't like being down big. Of course, we are off 4 points on the S&P cash, 2.5 billion shares as we start this show. So it is a interesting and wonderful day out here, and even some really good music during the break. I had to almost jump off a bridge yesterday, but I digress. Anyway, a lot of movement out here. I suspect what we have going on is a lot of people going delta neutral today and not waiting for that day to actually do it. That they probably made and did it a day extra early, which is not unheard of in the option community. And yeah, poor Sid. Oh boy, what a great song though. They were playing "Shine On You Crazy Diamond" during the break, of course, about Sid Barrett, the first lead singer of Pink Floyd. So anyway, what else do we have going on out here? And that is, I think we had a lot of people just use today as the excuse to go ahead and finish going delta neutral. The market presented itself, and they went ahead and did it. We will know tonight after the market closes. I get the audited options data about 6:30 at night, so I'll go through it. We're going to look at a chart here in just a few moments and take a look at it. But it looks to me like, we had a lot of things going on over the last 24 hours. And the question is just what is going to happen for the coming weeks. And I don't think anything has changed my view here. Even with what I saw possibly happening today, last week, we will persevere. But I think just looking at some of these stocks, and actually I was long a stock that I think is going to be a short squeeze candidate over the next 8 trading days. And why it was off about $1. By 10 o'clock, it was already up, and it's up 2.5% today. And I think you should make sure that if you're short some of these highly short stocks, that you have an incredibly tight leash on them, because I think that they are getting to run over the next 8 trading days and probably into Christmas and into New Year's, although probably 90% of the move will be over by a week from Friday. So what else do we have going on here? Well, it's always a good show to start off with the history on this day. In 1999, VA Linux Systems goes public on the NASDAQ, selling 4.4 million shares at an initial offering price of $30. Shares in the company, which had a net loss of 14.5 million shares on 17.7 million in revenues, opens for trading at $299, basically 10 times the IPO price. At that level, VA Linux has a total market cap of about $7 billion, or 400 times its revenue, with an infinite multiple of its earnings, because, of course, it didn't make any. And the stock closed that day at $239.25, an all-time record gain of almost 700%, which I don't think has been beaten since. Just a year later, the stock's trading at $9.40, and I think it got bought out not long after that for almost nothing. But I digress. Anyway, on this day, we see what bubbles are really like in 1999, and we partied like it was 1999. That too. Of course, last Friday, I had a little bit of my news. As I always like to say, when news breaks, I'll be there to fix it. But I had this to say on Friday. I am showing a chart here that I saw come across. It's probably fairly interesting, and that is 6 months, Shanghai stocks are up 43%. I think that probably tells you, if you're thinking of a bubble, that would probably be a good example of one. And, it's just one of these things where the market has gone parabolic. And if you look at this chart, it's hard to not think that you could at least get a 50% retracement. And my guess is that retracement could come as short as, over a period of as short as maybe a couple of months. So what took us 6 months to get here, or 7 months, could come back in 2 months, or at least half of that. That still wouldn't break a bull market in this, but that was me on Friday or Thursday. I can't remember now. All these days get mixed up. Anyway, I was showing this chart, and it was the incredible move off the June lows for the Shanghai. And, of course, what did we have going on over the last night? And that is, we were shanghaied. China basically stepped up its efforts to curb the expansion of an opaque local government debt market, and basically below anything rated below AAA or sold by insurers graded lower than AA are no longer allowed to be used as collateral in short-term loans obtained through repurchase agreements. They were having a little bit of a shell game going on there, and they yanked the tablecloth off. They left this tablecloth off the table without moving the silverware and or the glasses. And what else can we say? We were shanghaied. Oh, most people don't know, so I'll bring it up now. You know why you're not supposed to have your elbows on the table while you eat dinner? It has to do with being shanghaied. And that is that the people that did the shanghaiing would go into the places of grog and food and look for people that had their elbows on each side of the plate. That is a habit that seamen learned to keep their plates on their table in a shifting sea. And that meant that you probably had experience and therefore were probably worth shanghaiing and throwing on board a ship of the realm in London or England. And that's how they did it. Well, people got pretty quickly figured out that that's what they were looking for, and women taught their sons not to put their elbows on each side of the table or the plate, making people may think that they were great seamen and would be shanghaied. Just a little bit. This is a little mint on your pillow, like at a fine hotel. Anyway, HP is getting small. A lot of push out there. I didn't really take a look at HP much today, but there is a lot of news on this today. And that is they are making a new kind of PC. They're going to have their own operating system in it also. It's just going to be a web PC and a web server. But the idea is right now the size of the servers are pretty large. And if you go to Apple or Google or Microsoft or Amazon, you will find that they build these giant servers out of shipping containers. And if there's a problem with one, they just hitch up a semi to it and back it out and then back in a brand new one in its spot. But pretty large. Anyway, HP's move here is to make these things about the size of a refrigerator and be able to put maybe an entire cloud service system in something that is a single tractor-trailer sized unit for most even Fortune 500 companies. Anyway, not going to be available to 2016, but they're starting to show some of this technology as they go to the split. And it is interesting, but a lot of news out there on that, and starting to show some of it. Why should HP outdo Intel or IBM in this enterprise area? I suspect it's because of the drop in cost, and one of the biggest expenses for any of these companies is the power. And what they're doing is making these all optical. So the CPU will work on copper wires, but basically the whole idea is to start making this in all the subsystems totally optical, which will use 1/100th of the power or even less. And the idea is that they'll be able to shrink the operating power, which is electricity, down, which is their single biggest expense after buying the actual servers themselves for data warehouses. So the idea is that HP is going to give them a operating system that's rather svelte, but also more secure than what Microsoft or some of the other companies are offering. It's based on Linux, but they're going to be changing it quite a bit. So most people's software should work. It's just going to offer a better security system. At least that's what HP is saying. So could be interesting. Yes. Lending Club. One of the reasons I've been bullish this week is how many IPOs are coming out. Lending Club is one of those coming out this week. The symbol will be LC. It offers IPO investors their first chance to own online financing. I don't think any of the big street names really care, but when you get to a lot of the companies like Wells Fargo and some of the others that are truly bricks and mortar banks, don't like this too much, because basically it gives you an opportunity to actually make some decent cash if you're going to deposit it. And they work by spreading the risk over many, many loans. I've known some people that have been in this space and put their cash into this lending space business for probably 5 years, and they've made some fairly decent returns, and the losses have been minimal, as they only accept probably the best loans that they can. The question would be how going forward regulations that come after them, because I think because they're not a bank, they actually dodge a great deal of them. And my guess is that as the IPO, some of these other banks will then start pushing on their particular senators and congressmen to start coming after these guys, much like Uber and Lyft are getting the dickens for being a cab company these days. But there's 7 others besides Lending Club this week. I'm not thinking that we get any significant downside. I'm actually surprised at the level of volatility we had today. Of course, part of the problem we had started with China and the Asian Pacific Rim, and then it went to the Greeks. And boy, did they have a day out here. The worst a day since 1987 and our crash. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, of course, the Greeks, there were a couple things. Of course, it started in Asia, and then we found out that the elections had been moved to the 17th for the Greek elections. And not only that, but a poll comes out and shows that the communist/socialist/ what else could you call them? Deadbeats. Basically want to go the way of France and do nothing and have the rest of the EU Union give them a bunch of cash or cause more problems. And nobody liked that. And no one wants to be around basically the Greek stock market thinking that this will be the straw that broke the camel's back and they'll kick the Greeks out. Anyway, the biggest one-day fall since 1987 in the Greek stock market. So we are seeing some very strong signals that the market has problems. Just very tough at this time of year to get too excited about seeing that happen. I think after the first of the year is much more likely to see these signs come to at least some fruition. Was saying that there is, well, we'll show it here. The options, basically, when I play them, I said that I thought that we were getting a very nice setup for Christmas here. And especially if you have a lot of high short interest in some of these stocks, think that they're going to do fairly well for you to the upside on a short squeeze. And right now, there just isn't a lot. I'm just showing you this today because I'll show you tomorrow's Wednesday. So we really won't see till Thursday the end of what's happening. But right now, pretty much a consensus, at least in option market makers on the SPYs, that you could go off anywhere from 201 to 210, and they're not going to be highly ticked on the SPYs. Above 210, even now they don't really think that there's a whole lot of chance that we'll go above 210, and there's not a whole lot of chance we're going to go above 201. What's the current ticket down here? SPYs 206. I suspect that range will continue, so I could see an expiration of something like 2080, 2090. Maybe we go up and test 2100 on the S&P cash before the end of the year, and then see it come back down to 2080 or something like that. It's not uncommon. I don't think we've broken the market with the move today. And again, 2.56 billion shares on the New York Consolidated Tape doesn't really change a great deal of what's going on in this market. And even though we had a nice try to route this market, there's too many people with too much cash, and I suspect all the people that got spooked came here and actually dumped more cash into this market. Now, the other thing we want to be watching at here is the dollar index. I know a lot of people think that this thing's going to pull back. It just doesn't look like it to me. I think that we are going to head up to about 92 on the dollar index, and why we have some small pullbacks. We were down to 88.15 on the dollar index, trading off at 88.68 right now. So it is problematic to think that we're going to have the kind of move that puts us, how can I put this way, puts us behind the eight ball before the beginning of the year. It just doesn't look like that to me. Anyway, you can always give us a call at 877-927-6648. Or you can, oh, there goes my thing. Just too slow, isn't it? Anyway, 877-927-6648. You can post a message in the den. And, or, of course, you can email me at path, at tfnn.com. But hope you didn't get too scared out of the market this morning. A little rain has to fall. We need to go to charts, actually. I've got a minute left, so we're going to start looking at them. Of course, one of the biggest movers out here is AutoZone. This thing had pretty much a broken higher without the kind of volume you'd like to see a great deal of. I mean, it was okay. It was 450,000 shares when this thing broke above the 561 February 12th high that had 400,000 shares. So it did expand, but it didn't expand wildly. You had a nice candle out here. Of course, you've got a little floating doji out here today. And, of course, blew through the $600 mark. I'm going to talk a little bit more about this when we come back. But certainly you can give me a call at 877-927-6648. Email me at path@tfnn.com or post a message in the den.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, I mean, if you were short, you had your opportunity. But I think you picked a bad week to give up drugs.
Looks like I picked the wrong week to quit drinking.
Probably picked a bad week to do a lot of things. Anyway, it is one of those things. Anyway, we were looking at AutoZone. And my thought out here is, boy, what you don't want to see this thing do is gap down tomorrow. You would have a wonderful island reversal. Looking at this company, I suspect, especially earnings over the last 4 quarters, this is a real anomaly in this particular stock, and I think it can be a one-off. Now, one of the reasons is I do a lot of my own work on my vehicles, and I'm up at AutoZone, and they're playing that horrible music. What is that? It's basically oompa music, but it's Mexican oompa music. It's just horrifically bad. Somebody's typing it in the den, I bet. Reggaeton. Oh, boy. Just the worst in the world. In fact, that's how they used to torture our World War II pilots, is by playing that reggaeton music. I'm pretty sure. I've read it in her history book. Anyway, one of the things that happens is, of course, you do business with any of these companies and they start sending you deals. And the deal that they keep sending me is if I'll order $100 off anything off the website, basically I'm going to get like $40. And I've taken up all the extra parts and pieces I needed. I'm to the point now where I just don't need anything. But I'm still getting those offers. And they've been going for about 2 or 3 months now from AutoZone. And my guess is that we are seeing a lot of people push the stock up to the highs at the end of the year. And the other 4 quarters where they basically missed on either the EPS or the revenues is correct. Like I said, I would watch this one fairly closely tomorrow to see if it basically pops back down. Yes, the horseless carriage is just a fad like the internet, both of them. Anyway, what else can we look at out here? Oh, we've got lots of stuff. TSCO. One of the big retailers of the UK and some parts of Europe. What? No, typed in the wrong one. What is this? So that's Tractor Supply. I'll find the ticker, but it's Tesco. TESCO. Isn't that it? Tesco. TSCO something. TESO, I guess, is the symbol. TE. So we'll take a look at that one. No, that's not it either. TSCO. Huh. I'll have to find it during the break. TSCO. Oh, okay. TSCO. I thought I remembered it. No, that's Tractor Supply. It's Tesco, the retailer from Europe. Yeah. Anyway, I wasted too much time on this. Of course, let's go to A&F. The CEO is leaving, and of course, everybody is had a sound on Wall Street. Anyways, had a sound rejoining a cheer to get rid of the guy. If you've seen him, he looks like a Bond villain. If you called Central Casting and say, I want like a creepy dude that's Northern European, maybe Swedish or something, and looks like a Bond villain, looks like he'd molest your kids, looked like he had too much plastic surgery. This is the guy. When you see him, I've always thought he was a little bit creepy. Anyway, they're more than willing to throw him overboard. I don't think it changes much out here, but basically bad earnings and just about everything else bad. And I guess at least the thought is if we get somebody new in, this guy will quit doing damage to the company. But, just a few months ago, this in September, October 27th, this thing was at a high at $45.50. And, of course, yesterday down to $26.19. None of these teen retailers are doing well. But this guy has been particularly bad as a CEO, and a lot of people pretty much have called them out on it. I think maybe the brouhaha for the board has finally reached such a crescendo that they cannot ignore it any longer. But certainly that is one. Now, could this thing get back up to the $32 range? I think so, but maybe this brand's hurt so bad that this is just the next ABC down. If this thing could pop back up in the $33 range, I would certainly look at it. We've talked about the show many times. We've been shorted in many times, and that has been Conn, C-O-N-N. It is a retailer of... You have it here? There it is. It is a retailer of electronics, much like Best Buy, but more like Aaron's Rents. And they've had a lot of problems with selling stuff, and they've had more problems with collecting stuff. People are running off with their TVs, refrigerators, and other things, which tells you that at the low end of the market, there still is a great deal of price pressure in this company. And, of course, it was down 37% or so this morning. We were shorted back in that $60 range. And it came down fairly decently for us, down to that $40 range, this big gap down. I think that's when we were short this thing. Anyway, we were good on this thing, and then, of course, like all stocks, they consolidate for a long time. In this case, I suspect there was a huge amount of distribution of the stock once everybody figured out that this thing was going to tank. Looking through the earnings on this one earlier this morning. I'm going to have to spend a little bit more time, but I suspect that this company has a real problem and could be, as they say legally out there, a problem with an ongoing concern. That is, that they will be there next year. It certainly looks like pretty large losses for a company their size, especially with Best Buy. Now, I wanted to see if Best Buy was really getting any kind of pump out of this today, and I'm just, they're pretty much where they're at. Best Buy has a seasonal bias all the way into the first couple of weeks and even into the Super Bowl, which fades after then. And, of course, last year's when this thing fell apart was the second or third week, about the third week of January, when they had to basically said that they really didn't make any money. They pushed a lot of products out the door. Now, that's somewhat been mitigated this year with Apple. But my guess is that we do see $22.15 again this year, coming year, from Best Buy as soon as the market on Apple starts to fade. Speaking of Apple, they pushed it down fairly hard on the open, and that was fairly close to the low of the day. Been coming back pretty much. There was some arguments out here on Bloomberg and CNBC today about whether or not they lost their mojo. But it didn't really have a lot of teeth in it. I don't think they were playing devil's advocate. They didn't really believe it to any extent that I could tell. But I think what we really want to be watching is probably after the first quarter and the iPhone 6 Plus route is over, and we find out what kind of ongoing sales rate that they have. This will all be water under the bridge, and of course they're supposed to come out with the iWatch, and a lot of surveys are out. I think CNBC had one today, but basically saying about probably 1 in 5 or 1 in 6 people that own a smartphone are going to be wanting to buy a smartwatch. Now, that's additional sales. But remember, you're not going to be getting the kickback that you get from the online service providers like Verizon or all the other ones that are basically taking $300 or $400 out of the price of that iPhone and giving it to Apple. Most of those phones cost them somewhere around in the low 200s to build. They sell them for somewhere around $700. I think $675 for the standard sized iPhone and $725, I think, for the iPhone 6 Plus. There's about $30 of manufacturing difference in there. So Apple actually makes about an extra $20 or $25 when they sell the iPhone 6 Plus. And also because it normally sells with a little bit more memory, probably making a little bit more money on the backside when they get to the iPhone store and the App Store. So that would be it. So it is interesting nonetheless, but we shall take a look at other stuff. Of course, one of the more interesting moves out here is Blue. Blue is a biotech firm, and if you didn't know what these folks did, they basically are working on the ability to make white blood cells. And, of course, that's a huge, big deal for a variety of issues. But ongoing, it would be a huge issue for sickle cell anemia that particularly attacks a certain segment of our population. But the thought is that this would be an ongoing treatment from what I read this morning, and a huge pipeline of drugs, but especially for people that maybe have been doing chemotherapy or other things like that, sickle cell anemia. But why it would be brief in the sickle cell anemia, only while you're going through chemotherapy, it would be an ongoing thing for sickle cell anemia, and they think that this could have a huge, huge market. And, of course, why this thing was just under 50 and now over 85 today. So keep an eye on this one, but of course the horse is out of the barn already on this one. But if it could ever come back and fill that $50 level, maybe it would be interesting to take a look at. Let's take a look at BAC. There were some little conventions out this morning, mini conventions and analyst days, and one of them was for banking. And the CEO of BAC basically didn't say much that was very positive. That pretty much opened up BAC at the low of the day. And, of course, they've recovered a great deal of this. But it certainly looks like there isn't a whole lot of reasons to buy BAC or any of these other financials out here. What we have seen, of course, over the last few days is definitively that Wells Fargo now is the biggest bank. And it's... I don't know what else you can say out here. AT&T, of course, they came out with some fairly bad news, too. We've talked about how T-Mobile and the CEO of T-Mobile's, how can you say it? His goal is to get that company bought out and sold. To do that, he's become a huge thorn in the side of all the other major carriers like AT&T. They've now been going after these customers at AT&T and Verizon, both of them kind of warning out here today that there's going to be big problems with these promotions. And the ongoing, you're signing up for a contract for 2 years, so that's not going to change anytime soon. So you're going to have to watch both AT&T and Verizon. But down on heavy volume today, and my guess is you're going to see this come down and test the 3174, which is the February 6th low with 68 million shares. So that would probably offer at least some support. We're kind of into those candles already at some length. Verizon also suffering the scourge of T-Mobile and their promotions. Down at 35 million shares, it's gotten into its low candle, and that is the low from April 25th that had 41 million shares, $45.85. And it quite hadn't hit it, so we're going to see that probably in the next few days on Verizon. But don't be surprised. Huge volume already and probably going to get past that 41 million shares before the end of the day. Okay. And see what else we do out here. That's another one. Amazon. Amazon has been talking smack to the FCC. If you've ever had to deal with anybody in the Department of Motor Vehicles, you know how stupid it is to do that. And I'm wondering the wisdom of Amazon talking smack to the FCC, basically saying that if we don't let them do drone testing here in the United States, that they'll take it elsewhere. And it just smacks of a little bit of hubris out here. I don't see that there's that much money in drone development to be had here in the United States. And certainly with all the problems that drones have been causing, I would much rather err on the side of caution. A lot of people are flying these drones around. What happens to an Amazon drone when it drops its package or runs out of juice or runs into a tree and causes an accident? Where's the insurance for this? How are they going to pay for it? I mean, there's a lot of things that this technology is overrunning, and it's still problematic as far as I can tell. Anyway, it is up. I didn't think that Amazon's going to go down very far, and I think you could probably see a nice push here into the end of the year for Amazon retail sales. And I even bought or signed up for Amazon Prime yesterday. We'll talk about that when we come back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're going to look at a few of the other stocks as we close up at the end of the show. Getting ready for the Tom O'Brien Show for the next 2 hours, and then the Andy Heck Show, starring Andy Heck, written by Andy Heck, produced by Andy Heck, and Andy's written some more stuff for Seeking Alpha, and you can probably catch his posts in the Den. I'm sure you'll talk about that later tonight. So we've got another good 3 hours after this. Anyway. What else do we have going on? Oh, I wanted to look at a few of these stocks and how they actually worked out. We were showing Altera yesterday, and of course, if it would have been any other time of the year, I would have been all kinds of short on this one yesterday with the doji. But it went into the March 21st high, $37.56, that had 6.5 million shares. Tried to get into it on September 9th with 2 million shares, then got into it yesterday with 2.3 million shares. It's closed back below it. So not a bearish sign out here, but certainly looks like a fairly wide 8-point range on Altera back down to the $30 range over time. And, of course, there's a nice little gap out here at about $34. I would not be surprised to see it come there after the first of the year, not anytime soon. But it is interesting. There are a few others out here that I wanted to see how they did. J&J. And of course, big moves in gold and silver today. So what else can we see? Certainly watching Johnson & Johnson, this thing just hanging out here at the highs. Certainly looks to me like one of the stocks that they could run toward the end of the year. Down on light volume so far today. Keep a close eye on this, and if you wanted to set an alarm, above 109.49 is something you want to be watching for in the near future. Kraft Foods, another one of these perennial highs out here, up on a lighter volume, but not really backing off either. This thing needs to test $61.10, the July 8th high, $61.10, 5.7 million shares. Got into that candle, but really didn't break it yesterday at $60.68 with 3.5. But my guess is we're going to see this test over the next couple of days, and that's certainly one of the things that you need to be watching out here on some of these bigger ones. Also, some of these stocks that have been hit very hard, like Stratasys. We were short this one a few times, and got that big run from 130 down to 104. Short in the Tech Insider on this thing. It kind of came back and did on earnings, unfortunately, so it didn't let us back in, but certainly now back down around these lows, and volume is not all that big. So it looks like maybe we find, or at least starting to find, some of these stocks that have made at least lows until the end of the year. $80.30 was the May 9th low with 3.6 million shares, and of course today 960,000 shares so far today, so going to come in rather light, and the energy, while good, wasn't that enormous. So another one you might want to take a look at. Of course, going delta neutral tomorrow, Weird Wally Wednesday, may have the end of our volatility for the year tomorrow, so check that out. I will see you tomorrow, same bat channel, same bat time. Remind yourself to sell when you can, or cover when you can, not when you have to. We'll be tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.